Okay. So up tak we had multiple sessions till now. We have discussed multiple provisions, अलग अलग type के regulations. Last session we discussed on gamut of regulations. Most of the provisions that we discussed in the last session were for a direct. Okay, ki this is the requirement you need to comply with. That's not the case with today's regulation. Today, what we are discussing with is the capital regulation. So, as I was mentioning, that we will require the attention through because it's a little technical over here. Uh, why these provisions came into existence? What are the requirements? Why do we do what we do? All those aspects we are discussing today. Okay. With that being said, let's start with the today's session, capital regulation. So, if I talk about capital regulations, I would divide the entire regulations into two parts. Okay. First is maintenance of the net owned funds, and another is maintaining of CRAR or CAR, whatever you want to call it. Or another word is leverage requirements. We'll discuss this. Okay. So as I was discussing, capital regulations itself can be divided into two parts. One is the net owned funds, another is CRAR, CR or leverage requirements. Okay. Now, what does net owned fund prescribe is an NBFC who is into business has to maintain a net owned funds of 2 crores at least. Now, what do you mean by net owned funds? We'll come to. It's a defined term. There are certain types of liabilities, or I would say funding sources like equity, convertible preference shares that are considered as a part of net owned funds. So these are the sources through which you have to bring in capital of at least 2 crores. However, this 2 crores requirement has now been increased to 10 crores. But this 10 crores increase is not a direct increase. It has been prescribed over a term that this 10 crores would be increased. So here is the timeline that is given. So if you see the table over here below, for NBFC ICC, they have to maintain current NOF is 2 crores. By 31st March 2025, you need 5 crores. And for 2027, you will have to maintain 10 crores of the capital. So very first thing, why does the NOF requirement? The NOF requirement comes with a simple underlying logic that if you are entering into a financial business, there are multiple things that you need to do. Okay, there are multiple items or multiple things or multiple investments that you need to make. You need a IT infrastructure, you need employees, you need to carry out certain compliance obligations. So to meet all those, you require at least certain amount of money that is your own, so own fund. So your own money is required to certain extent so that you are able to survive this business. तो हमारा बोलना ऐसा है कि भाई अगर फाइनेंशियल बिजनेस में घुसना है तो इतना पैसा तो तुम्हारे पास होना ही चाहिए. अगर इससे कम पैसा है तो फाइनेंशियल बिजनेस में मत आओ. That's a simple requirement for NOF. Now, NOF का definition क्या होता है? That I will discuss along with CR and CAR. Exact definition we also will discuss. That is the ground of NOF. Here so currently it's 2 crores. For NBFCs over the time they will have to increase it to 10 crores. However, if you go for new registration today for NBFC, you have to maintain a capital of 10 crores. For new NBFCs, it's 10 crores for day one. For existing, we have given a timeline to achieve this 10 crore requirement. However, for HFCs, the housing finance companies, the requirement of net owned fund is 20 crores. Now, this 20 crores is not from the SBR, but the HFC master direction itself prescribe the net owned fund of 20 crores. So, if you want to get into housing finance business, you at least require 20 crores as net owned fund. Utna to lana hi hoga. Okay, that's a simple requirement under net owned funds. For core investment companies, CICs, there is another term that we talk about, adjusted net worth. That I think we will discuss if possible in today's session or in the subsequent session. That's a separate requirement. Another requirement. So that was the one leg, net owned funds. Now we cross to the another leg, that is CRAR. So what is CRAR or what is CR? So over here, if you can see the so over here, so CRAR or leverage requirement. So there are here we can further divide these requirement into two heads. One is for NSI and another is for SI. For NSI, the requirement is that you need to maintain a leverage of 7 times. Simple logic. You need a leverage of 7 times. How is leverage calculated? Outside liabilities divided by owned funds. Outside liabilities divided by owned funds. Now, when I talk about, so here also we are using two terms. One is owned funds, another is outside liabilities. Understand one point here. Owned fund is different from net owned funds. There are few items that we subtract from owned funds to arrive at net owned funds. So we till now discussed three terms: owned funds, then net owned funds, and outside liability. Own fund and net own fund, we will discuss the definitions going further. Outside liability is not defined under NSI regulations. However, there is a definition that's provided in the CIC master direction. That's actually not applicable to NSI. Though it's not applicable, but as there is no guidance under NSI direction, we can of course refer to the CIC direction, but it's under CIC master direction. That's one point. We will discuss the definition of outside liabilities as well. When I talk about SI NBFCs, they need to maintain a capital of 15%. Now, or a CRAR of 15%. It's a very difficult term to understand. What do you mean by 15%? So what we say over here is that you need to bring in capital from some tier 1 sources and some tier 2 sources. That is 15% of your risk weighted asset. A very typical term. We will have to understand each of them. Before we get into understanding these terms, one thing that I will take a step back to explain you why do we have these requirements? Why do we provide capital restrictions upon the NBFCs? From where do you raise funds? Why do we want to regulate that? So here, the very first thing that I would need you all to understand is that when an NBFC suffers any losses, or any company for that matter suffers any losses, the very first tranche of losses is suffered by the equity holders. Because see, what would happen is if you debit, so I can give you two explanations to it. One is if it goes into insolvency, who gets paid last? Equity holders. So of course, who has the largest risk or who bears the first losses? That's the equity holders. Another, I can explain it from the accounting perspective also. Under accounting, when you incur any losses, what happens is those losses are carried to your reserves, subtracted from your reserves. What are those reserves? Actually, value of your equity holders. So who is absorbing those losses very firstly? That's the equity holders. And anyway, you understand that if a particular entity is making losses, the very first investors who will bear the brunt is the equity holders. If the defaults go further, means if the value of assets is even lower than the equity available to me, then the losses would go to the debt holders or another capital. Let me take you an example. Imagine a company with a balance sheet size of 100 rupees. It has assets of 100 rupees, it has equity of 20 rupees and a liability of 80 rupees. Okay? Imagine this entity suffering. Now these assets that the company held of 100 rupees were able to realize only 90 rupees. What would happen? First, the debt would be paid off, entire 80 would be paid off, remaining 10 would go to the equity holders. So the 10 rupees losses, who had to bear it? The equity holders. So the first level of losses is bared by the equity. Now in the same example, understand, what if the losses were 30 rupees? So my assets were basically able to realize only 70. So when I realized only 70, what would happen is my entire debt holders would be paid entire 70. They had to bear a loss of 10, whereas equity was completely wiped off. Equity did not receive any amount. Okay, I hope I'm coming out clear till here. So what actually equity is doing is that equity acts as a cushion to absorb the losses. Now imagine under the second circumstance where the losses were 30. Imagine if the equity holders were 30%. If we had an equity of 30 and the debt of 70, over there the equity itself would have been sufficient to absorb all the losses and my debt would be entirely paid. So that's what the entire purpose of the capital regulations is. That we regulate the NBFC such that they maintain sufficient capital so that when the losses arises, the equity holders or we are protecting the senior debt and the losses are absorbed by other investor and not the senior debt holders. That is our equity holders, CCPS holders, or perpetual preference shares, all those kinds of instruments, they absorb and a senior debt is protected. Let's circle back to this question. Why do we need to protect the senior debt? You are saying कि what you are saying is I will bring in the cushion. अब cushion में आग लग जाए लगने दो, मेरे को जो नीचे senior debt बैठा है उसको बचाना है. Why is that logic? Why I'm so worried to protecting senior debt? So here there are two reasons to it. First, in the previous sessions also I've discussed that the financial sector is a very crucial. See, whenever there is a losses that are absorbed by the senior debt, only then there is a default. Actually, if the losses are sufficiently covered by the equity holder itself, we will not have any default. Default occurs when I'm unable to pay the debt holders. And whenever there is a default in the financial sector, it's a huge thing. So, because of two reasons. One is that all these financial intermediaries are interconnected. इसने इसको पैसा देके रखा है, इसका पैसा इसमें लगा हुआ है, इसका पैसा इसमें लगा है. The financial sector is very much interconnected. So if one entity defaults, it actually causes a domino effect. So even as happened in the 2008 crisis, so that what happens in these type of crisis situation, if one entity starts to default, it takes with it multiple entities with it. So that's what the problem with financial sector is. It starts a domino effect in case any one single default starts. Have we seen any practical example of it in India? Yes, it was the ILNFS fiasco. So what happened under ILNFS fiasco was an entity, ILNFS, government-owned entity, it defaulted on its debt obligation. A very large NBFC CIC, it defaulted on its debt obligation. When it defaulted on its debt obligation, what happened was that the banks got suspicious of the NBFC sector. Now, as the banks got suspicious of the NBFC sector, they stopped funding NBFC sector. And NBFC sector is 70, if I'm not wrong, I'm giving a ballpark figure, around 70% of the NBFC funds, to 60-70% at least, comes from the banks, if not more. It can be even more. So 70, imagine a 70% investor stops giving you funds. Where do you get the funds from? And as you all understand, see, in the business, when I'm talking about business, I do not actually repay debt. I actually repay debt from another debtor. Because if I repay the debt with the principal, the money goes out of my business, my balance sheet size decreases. I cannot do that. I am to growing now. So what I will do is when my debt reaches to maturity, I will raise new debt to pay off the old debt. That's how any business works. But if the banks have not been willing to pay me, what happens to my older debt? How do I repay them? Because my assets will reap my benefits, or my assets are invested in the long term, they will come over the time. How do I pay those my liabilities? So because of, we will discuss, I think we will at some point also discuss about liquidity risk in a future session, or that we'll discuss this in more detail. But let's understand this point, that when the trust in the financial sector is gone, the financial sector is gone. The entire financial sector runs on trust. It's a very important concept. Before understanding into regulations, a very important point here I have touched upon is that a financial sector cannot run without trust. I can take multiple examples to it. The very recent bank defaults in US. What was the case? The same case, that a bank, which people thought is in now difficulty, people ran to bank to withdraw that money, and that further deteriorated uh, the bank's asset quality, or the bank's balance sheet quality. That's how actually the financial sector works. You keep your money into banks because you trust the bank would give you money. You invest in banks invest into some other financial sector because they trust they will pay back the money. So this protecting this trust is very important. To protect this trust, we have to protect the senior debt, because equity holders, when they come into the investment, they know what risk they are taking. But when we talk about debt holders, they actually come with the obligation that I will be paid back along with interest. That's what their idea is. So protecting senior debt is very important. So our target for the capital regulations is simple, that we have the equity that is thick enough to absorb losses so that the senior debt is protected. Till now, am I coming out clear?
Yes, sir.
Okay. Anything you want to understand? So we discussed two major points till now. One is NOF requirement. That is कि भाई अगर financial business में आना है तो इतना पैसा तो आपके पास खुद का लाना होगा. That we discussed क्या है limits है. Another is CRAR और leverage requirements, which prescribes कि आपका funding का जो ratio है between equity and debt वो कितना होगा, so that your equity is enough to absorb the expected loss. Till now, I think I'm clear. So here, when I calculate CRAR, the formula for calculating CRAR is tier 1 capital plus tier 2 capital divided by risk weighted assets. So tier 1 and what are tier 1 and tier 2 capital? These are the specific prescribed sources. We will discuss these specific definitions. What comes under tier 1, what comes under tier 2. We'll discuss these specific definitions. And then there is risk weighted assets. So what is risk weighted assets? Now, this is a concept to understand. What do you mean by risk weighted assets? I'll just give you a brief over here what is meant by risk weighted assets. Can you see this table over here? Okay. So what we say is कि देखो तुम्हें 15% capital तो maintain करना है. Okay. I will bring in 15% capital from the sources that you say, or the prescribed sources, उन्हीं से capital लेके आऊंगा. Now, how do I determine 50% of what? So we are not saying total balance sheet का 15%. We are saying कि how, see, we will base it on the basis of the riskiness of the asset. कि तुम्हारा जो asset size है, उसमें जो assets है कितने risky है, उस basis पे we will determine कि तुम्हें कितना capital लेके आना है. So 15% is not simply your asset size. 15% is risk weighted assets. तो मैंने क्या किया, जो मेरे जितने assets उनका risk weighting किया. तो बेसिकली रिस्क वाले वेट्स मैंने उनको असाइन किए, उसका जो वैल्यू निकल के आया उसके बेसिस पे आई विल डिटरमाइन द कैपिटल. आई विल टेक एन एग्जांपल. सो इमेजिन an NBFC which has three assets on its balance sheet. One is cash, it has some investment into G-Secs, and it has given out some loans. So okay, 300 रुपीज का बैलेंस शीट है, 100 रुपए का उस एंटिटी के पास कैश है, 100 रुपीज में उसने G-Sec में इन्वेस्ट किया है, 100 रुपीज का उसने लोन्स दिए हुए हैं. ठीक है, यहाँ पे क्लियर है. अब यहाँ पे जब मैंने किया है तो मैंने हर एक असेट का रिस्क वेटिंग करूंगा. ओके, सो आई वुड से कि देखो कैश जो है, कैश इज तो वेरी सिक्योर. कैश में डिफॉल्ट होने का क्या है? हाउ कैन अ कैश डिफॉल्ट? कैश इज कैश इन हैंड. हाउ कैन अ कैश लूज इट्स वैल्यू? सो कैश से तो कोई रिस्कीनेस है ही नहीं मेरे बिजनेस में. तो आई विल अलॉट देम अ रिस्क वेट ऑफ 0%. सो व्हाट आई विल डू इज 100 into 0%. तो कैश का रिस्क वेटेड असेट कितना हुआ? 0. द रिस्क वेटेड asset of cash is 0. When I talk about G-Sec, G-Secs are very secure. It's very unlikely that a government would default. But any case, G-Secs can still fall in value. There can be some market disruptions which they lose their value. Or so there can be losses from G-Sec. G-Sec is not prone to no losses. It is prone to no default, but it can lose values. So anyway, there are losses. And there have been cases in history. There have been ample cases in history where the governments have defaulted on their debt obligation. So I'm not saying that a government that does not default. The likeliness of the government defaulting is less, but at the same time, you cannot say the governments won't default. Governments have defaulted. Okay, so 100. So what I will saying it's a secured asset. So I will allot a risk weight of 20%. So the risk weighted assets portion of the G-Sec would be 20. All this is given on this table, on the bottom side. When I talk about loans, actually these loans are risky loans. So I'm saying these are risky. भाई इससे पैसा आया नहीं आया. So what I'm saying is कि लोन का जो risk weighted assets होगा that would be 100%. So लोन का equivalent risk weighted assets कितना होगा? 100. Accordingly, the company का total risk weighted assets कितने हो गए? 120. Now actually forget the guarantee वाला part. Just ignore the guarantee वाला part. I will come to it once. Just see these three: cash, G-Sec and loan. So अगर कैश G-Sec and लोन का देखो तो मेरा कैपिटल की रिक्वायरमेंट कितना आएगा? रिस्क वेटेड एसेट्स, सॉरी, मेरा रिस्क वेटेड एसेट्स कितना आएगा? 120. नाउ आई हैव टू मेंटेन 15% of this 120. So what I will do is I will 120 into 15%. This is the capital that I require from tier 1 and tier 2 source. Clear है? Any doubts?
Sir, ये cash amount 100 into risk weight will give RWA 0, 100.
Oh, sorry. I made a mistake over here. This would be 0.
0, right? That is why it will come to 220.
Yes. Sorry, apparent mistake at my end. This risk weighted.
This has to be 0.
Okay. Minor correction over here. So read this as 0, the first column. Rest all is fine. Okay. So this is till now the very basics of what is capital regulations. Why do we have them? I will just summarize. Net own funds, prescribed sources से इतना funds आपको लाना ही होगा, so that you ensure that the capital you at least have enough funds to run the business. So इतना minimum funds. Another requirement is to handle the riskiness of the asset. इसमें NSI हो, you know, that's the BL that you comply with. Leverage requirements, you cannot have a leverage of more than 7 times. How do you calculate the leverage? Outside liabilities divided by own funds. Both of these are defined term. Outside liability under CIC master directions, own funds under the NSI master direction itself. If I talk about SI, systemically important NBFCs, I know they are very much important. So that term itself, systemically important. So now I will also explain what this meant by systemically important. So systemically important NBFCs means if there is a disruption in these kind of entities, they will have an impact on the entire system. Hence, systemically important NBFC. So here the term comes from. You are so important that if there is a disruption in you can cause disruption to the entire financial sector. You can start a domino effect. So that's where the term systemically important comes from. So if you are systemically important NBFC or a ML that we have already discussed previous sessions, you need to comply with CRAR, that is capital risk adjusted ratio, or capital adequacy ratio, as you may call it. Both the terms are same. calculated by tier 1 capital plus tier 2 capital divided by risk-weighted assets. Okay, why do we have it? To absorb the sufficient losses so that a senior debt doesn't have to suffer the loss. Moving ahead from here, when I move ahead from here, how much CRAR I have to maintain? 15%. Now, of this 15%, at least 10% has to be tier 1 capital. So the sources that qualify for tier 1 capital should be 10%. Rest can be tier 2. Okay. Another thing is, if you're a gold lending entity which is primarily engaged in more than 50% of your assets are into gold lending, in that case, you have to maintain a tier 1 of 12%. That's a simple requirement. Risk-weighted assets, we already discussed. Till now, if you're clear, I will just move ahead with the second term. Okay, so when I'm discussing about risk-weighted assets, now risk-weighted assets. So what I did was, I did the risk profiling of the assets and accordingly determined what would be my liability mix. I hope this line is clear. That the riskiness of my assets would determine my liability mix. ये चीज करने के बाद, there are some exposures actually that do not come on your balance sheet, but can actually cause you losses. A very plain, simple example is a guarantee. Imagine an NBFC issued a guarantee in favor of one of the group's companies. In case that company defaults, actually you will have to pay it out. Now, to pay it out, you will need funds. You incurred a loss, but your capital was not sufficient, because see, capital sufficiency is very crucial. You need sufficient capital to go. Okay. Here, one more term that I will like to add up in between is, when I talk about tier 1 capital, now these are the super capital. These are the very, I would call a superior quality capital. These are like equity funds. These are equivalent to equity. These are so good quality funds. Okay, because we say good quality funds for the funds that are able to absorb the losses first. We are very much biased. यहाँ आप अगर लॉस लेने के लिए तैयार हो तो बहुत अच्छे आदमी हो. That's what how NBFCs think. So tier 1 capital, these are such a refined quality capital that they are called going concern. So if your losses are, so this is a concept I'm explaining you. I don't think you'll find it anywhere else other than Basel norms. This is described in the Basel norms. So tier 1 capital, when the losses are till tier 1 capital, that is, a tier 1 capital is sufficient to absorb losses, we call that the entity is under going concern. You all understand what the term going concern means. So entity is under going concern. However, then these regulations pour down till tier 2. You will see when we discuss on the definition, a tier 2 capital is somewhat like a subordinated debt. Means it's like a debt instruments only, but it's superior. It will absorb losses before senior debt. Those kind of securities. So these kind of securities, if your losses are poured down to tier 2, actually it's called a gone concern. Means now entity is actually going to be finished up. It's only that liquidation, there are losses, these losses can be. So our target is always that the losses should be maintained in tier 1 only. The day they cross to tier 2, it actually raises question on the survivability of the business, because that's the time that your net worth becomes negative. Okay, I hope that's clear. So what we're discussing is, when we talk about the off-balance sheet exposures, they can also create losses. So to absorb those losses, what we do is, we determine, now hear this very carefully please, that we determine an on-balance sheet equivalent of the off-balance sheet exposure. So your guarantee did not have any on-balance sheet exposure, on-balance sheet value, but it has an off-balance sheet exposure. What I will do is, I will convert this off-balance sheet factor or off-balance sheet exposure to my equivalent of an on. कि अगर ये on-balance sheet होता तो इसका value कितना होता. Hence, we use a term called conversion factor. So to explain, it's very simple. How do I determine capital for off-balance sheet exposure? I multiply off-balance sheet factor to a conversion factor, then multiply it to the applicable risk weight, and accordingly arrive at the risk weighted asset. That amount would be added to the risk weighted asset. How does the term conversion factor come into it? That's what I explained. That an off-balance sheet equivalent, I determine a on-balance sheet exposure, and hence the term conversion factor. So for off-balance sheet, for a on-balance sheet exposure, amount into risk weight is equal to risk weighted value. For a off-balance sheet exposure into risk weighted into conversion factor into risk weight into is equal to risk weight. That's all is to calculate the risk weighted asset. Now, if you consider cash over here 0, then that gives you a value of 220. Now, you have to maintain a capital of 15% of 220, of which 10% has to be tier 1. Rest can be Now again, this 15% is minimum. You can of course have higher capitals. Okay. Now how does the higher capital work out? Most of the NBFCs in India would have a higher capital than 15 because their investors would ask for a higher capital. That's what is a basic framework of capital regulations. I know we have not discussed on what are these terms, what are these sources, an adjusted network. We'll just move ahead to them. But before that, any doubts and queries? Okay. So we'll then
Kasim, one minute. It's small question. Could you just explain the calculations for the guarantee bit, like the last thing which you said? What into what?
for off-balance sheet exposures, so example guarantees, what we do is amount into conversion factor. So there is a conversion factor for each type of off-balance sheet exposure. So off-balance sheet exposure that you have, you use the conversion factor, you multiply it to the conversion factor, and then apply the risk weight. Now, what is this conversion factor actually? Because this exposure is off-balance sheet. So I do not have an on-balance sheet equivalent to it. So to translate the off-balance sheet exposure into an on-balance sheet one, I use a conversion factor. So what this conversion factor actually says is कि भाई अगर ये asset जो अभी ऑफ बैलेंस शीट है, अगर ये तुम्हारी ऑन बैलेंस शीट पे आता है, या इससे क्या लॉसेस हो सकता है जो तुम्हारे बैलेंस शीट लॉसेस की तरह आ सकता है, बैलेंस शीट एक्सपोजर के तौर पे आ सकता है, वी कन्वर्ट दोज वैल्यूज. समझ में? In a simple terms, in simple terms, amount into conversion factor into risk weight is equal to risk.
मेरा ही भी इससे रिलेटेड एक क्वेश्चन था कि ये जो आप कन्वर्जन फैक्टर बोल रहे हैं वो हम मतलब कितना लॉस होगा उसका प्रोबेबिलिटी जो एंटिटी होगा वो डिटरमाइन करता है या कहीं पे डिफाइंड होता है?
मास्टर डायरेक्शन में सब कुछ दिया हुआ है. यू विल सी अ टेबल इफ यू गो टू द मास्टर डायरेक्शन. रिस्क वेटेड एसेट्स के लिए देयर इज अ स्पेसिफिक टेबल्स, उसके अंदर ऑफ बैलेंस शीट एक्सपोजर्स के लिए कन्वर्जन फैक्टर्स भी गिवन, नीचे जाके गिवन है.
ओके ओके
ओके. नाउ लेट्स मूव टू द डेफिनेशंस. सबसे पहला टर्म आई टॉक्ड अबाउट ओन्ड फंड्स. कहां पे बात किया था ओन्ड फंड्स का? एक तो जब मैं लेवरेज रिक्वायरमेंट कैलकुलेट करा था, और एक ओन्ड फंड से ही मेरा निकल के आएगा नेट ओन्ड फंड. So when I talk about owned funds, what is owned funds? Prescribed terms: paid up equity capital, paid up preference shares which are compulsorily convertible into equity, compulsorily convertible preference shares, free reserves जो आपने पैसा कमा के रिजर्व्स में बनाया हुआ है, बेसिकली इक्विटी का ही पैसा, बैलेंस एंड शेयर प्रीमियम अकाउंट, कैपिटल रिजर्व रिप्रेजेंटिंग सेल्स, मतलब बेसिकली रियलाइज्ड कैपिटल रिजर्व, ऐसा कैपिटल रिजर्व जो आपने रियलाइज कर लिया है, वैसा कैपिटल रिजर्व एज रिड्यूस्ड बाय. हाँ, now these are the assets that are reduced by. So आपने इन सबको ऐड किया, इनमें से आप माइनस क्या करोगे? Accumulated loss. If you have any loss balances in your balance sheet or in your P&L for the current year, you will subtract those minus intangible assets. So if you have any intangible assets, you have softwares on your assets, you have some some receivables, all those kind. Not receivables exactly. Receivables are not considered intangible, but intangible assets mostly softwares or your some intellectual rights you have, all those are subtracted, all those are not considered. You need to subtract those intangible assets minus deferred revenue expenditure specifically given under balance sheet. You arrive at the owned funds. Okay, so this is owned funds. How do I compute net owned funds? Now just one point over here, tier 1 capital that I discussed is same as net owned funds. So net owned funds and tier 1 capital has the same definition. Just one difference is there, I will explain it to you. So first we calculated own funds. Now we subtract two items to arrive at net own funds. I have told this in the previous session, but I don't think people would recall it. Two items. One is investment in shares of NBFCs. If I have invested into the shares of another NBFCs, that's reduced from my net owned funds. If another is if I have made any investment into my group companies, any investment in my group companies is subtracted, where these investment in NBFCs as well as the groups exceed 10% of my owned funds. समझाता हूं, मतलब मेरा टोटल नेट ओन फंड्स था से 100 रुपीज, मैंने दूसरे NBFCs में इन्वेस्ट किया हुआ है 20 रुपए. तो व्हाट वुड हैपन इज 10% ऑफ ओन फंड कितना हुआ? 10 रुपीज. एक्सेस ऑफ 10 कितना है? मैंने इन्वेस्ट कितना किया हुआ? 20. Let me take an example of 25, नहीं तो बहुत कंफ्यूजिंग हो जाएगा. I have invested in other NBFCs 25 rupees. So 100 का 10% कितना हुआ? 10 rupees. नाउ 100 के ऊपर मैंने कितना इन्वेस्ट किया? 15, 25 टोटल इन्वेस्ट किया था, 10% था, तो इन एक्सेस ऑफ 10%, एक्सेस ऑफ 10% कितना है? 15. So this 15 is deducted from my own funds. So my net own funds would be 85. Okay, so that is how I arrived at net own funds. Is this very similar to tier 1 capital? Just only one addition. When I talk about tier 1 capital, perpetual debt instruments up to 15% of the tier 1 capital. So another sources से जो मेरा tier 1 capital आ रहा है, उससे 15% तक अगर मेरे पास perpetual debt instruments है, I hope you guys understand what perpetual debt instruments. Perpetual debt instruments are basically debt that are not actually do not have a repayment date. They go on perpetually. Only interest is kept on paying on them. So that are called perpetual debt instruments. These instruments are even riskier than equity. Maybe in some sessions we discuss, it's a very typical instrument. These are included in the tier 1. तीन definition बात किया. Own funds, these add किया, minus these all sources add किया, उसमें से minus किया, उसमें से तो ओन फंड्स आया. ओन फंड में से दो चीजें, इन्वेस्टमेंट एनबीएफसी, इन्वेस्टमेंट इन ग्रुप कंपनीज, दोनों को माइनस किया, तो आई अराइव्ड एट नेट ओन फंड्स. नेट ओन फंड्स के अंदर परपेचुअल डेट इंस्ट्रूमेंट ऐड किया, तो आई अराइव्ड एट टियर 1 कैपिटल. दीज थ्री टर्म्स आर इंटरलिंक्ड. टियर 2 कैपिटल अपने आप में अलग चलता है. टियर 2 कैपिटल का इन सबसे कोई लेना देना नहीं, उसका डेफिनेशन है, वो सब चीजें वहां पे ऐड कर लो, वो टियर 2 कैपिटल आ जाएगा. सो व्हाट आर दोस आइटम्स? प्रेफरेंस शेयर्स व्हिच आर नॉट कंपल्सरी, मतलब जो टियर ओन फंड में काउंट नहीं हुआ, मतलब टियर 1 में काउंट नहीं हुआ. बेसिकली जो आइटम टियर ओन फंड में काउंट हो रहा है वो टियर 1 में काउंट हो ही रहा है. So जो प्रेफरेंस शेयर्स जो वहाँ काउंट नहीं हुआ, then there is revaluation reserve up to 50% वैसा है. General provisions up to 1 point, so it's up to 1.25%. So what does it mean is कि अगर आपने एक standard assets, this is a typical term, हाँ यहाँ थोड़ा समझना, कि where you have maintained the provisions up to 1.25% of your risk weighted assets, 1.25% तक के reserves are considered part of tier 2 capital. What is the implication basically? क्योंकि देखो मैंने क्या बोला था पहले कि when I charge the provision, I charge into P&L. Anything that I charge to capital actually reduces my free reserves and hence my owned funds. यहाँ समझ में आया होगा. तो बेसिकली मैंने अगर कुछ भी P&L, तो ये जो रिजर्व्स है जनरल के, मैंने एक्चुअली चार्ज किए थे टू माय P&L, they had actually reduced my free reserves, hence my capital. But I'm saying कि 1.25% up to your general reserves अगर आपने मेंटेन किए हैं, that will form part of tier 2 capital. मोस्टली हर एनबीएफसी का tier 2 capital का पार्ट यही होता है. Usually they do not have, usually that's hybrid capital, there is subordinated debt, perpetual debt instrument that do not qualify for tier 1. मतलब मैंने बोला ना 15% तक का ही लिमिट है, tier 1 के 15% तक we gave up. तो अगर कुछ एक्सेस है उसका तो वो tier 2 में फिर काउंट होगा. ठीक है, this is all the definitions. I would again suggest please go read it once, either from this PPT I will send it across, or either through the regulations. Read it once. पढ़ने के बाद अगर फिर भी क्लियर हो रहा है देन इट्स फाइन, नहीं है तो आस्क. इट्स अ लिटिल टेक्निकल, आई अंडरस्टैंड. पहली बार अभी का लग भी रहा होगा कि आई हैव अंडरस्टूड, बट इट्स नॉट दैट इजी. So I will suggest read it once.